Happy October 25th, everyone. Let's review the events in the market this week. As I warned you, since the start of 2018, most instruments and most indexes reached institutional Fibonacci reversal zone. Here's a very powerful reminder what's playing out on Amazon right now. Amazon came out with spectacular earnings. Spectacular earnings don't mean a thing. Amazon collapsed more than $350 per share. Amazon sitting at crucial Fibonacci support, cannot short. This key support has been presented and respected for the last 3 weeks. This is a channel on Amazon. This resistance and this key support. This support is out. Ouch. Here goes Amazon. This support is holding the key. Knowing what to do with your position is a key. Absolutely cannot short randomly outside of the support. It will never work. Only if rules are met, you can take a trade. Speculation is never, ever, ever an option. Here is stunning, flawless reminder on Netflix. Shock or not, 7 million subscribers added. Ouch. How many points did Netflix collapse? So many. It's impossible to believe. It just came out with stunning earnings. Look at that. $100 per share? Is that possible? Of course. In the course you learned that this is where you exit the position, not enter the position. Netflix in free fall. This holding the key. This level is out. Ouch, ouch, ouch. Here goes Netflix. If trading on fundamentals meant anything, every single person on the planet would be Bill Gates. No surprise whatsoever. What's happening on Netflix? What's happening on Amazon? And this is what we've been waiting on S&P. Are you shocked that buyers been stepping in on S&P? Do not be. As we've been watching this Thursday open, S&P is sitting at institutional support, cannot short. This is where S&P is now. This is where buyers try to step in since yesterday market close. This is your day trading support that you can use on any day trading chart you use. If I convert this chart to 5, identical formula. This is 5-minute chart, yesterday market close. What is the problem? Buyers are worthless. This is one of the last institutional support where buyers been defending this area and this level since June. Take a look. This is not the place to short. This is where buyers been coming from yesterday, but as we discussed, buyers are worthless. This is where bullish rally started from in the month of June, from here to here. And this is where market sold off. Boom. What is the problem? Buyers are worthless. First time since 2016 we're witnessing institutions not buying these markets. However, when market dancing in bullish correction, it's presenting a very big challenge for day trader. Pretty dangerous open. And if you understand anything about Fibonacci structure, let me remind you. This is a chart present in front of you for years. This is not the place to buy. Worthless action at support. No spectacular bullish rally. Last key support 2500. And if I put side by side the chart going back to 08, charts are twins. Ladies and gentlemen, this is a chart in 08. This month I celebrate 10 years since I developed the strategy I teach in the course. strategy I use for my own positions. This was '08. What was the key number in '08? 1500. What is the key number right now? 2500. The number that's been respected by sell-off at the start of this year. This is worthless bullish action that's coming from institutional support and day trading trend inception. What price will do at 2700 to the upside is a key. And once again, was I right or was I right? Not the place to short. What price will do next in this area is a key. Buyers are trying, but buyers are so worthless. And if you're taking a look on this 5-minute chart on S&P, charts are twins with euro. This is where euro sold off from, trying to break through since June this year. And that's what we're monitoring for right now on S&P. So again, as our bias remains firmly bullish, we know what we are paying attention to. What are we expecting? We're expecting pullback from 26.8475, green line in front of you. And if price collapses all the way back down, it's absolutely expected. Only then market will become much more conservative. So please pay attention. While we're waiting on S&P, let's take a look on other instruments and let's see what plays out. Let's take a look on Tesla. Shock or not? Take a look what's happening in front of you on 1-minute chart. This is Tesla. Institutional support present in front of you for the last 2 years is where Tesla skyrocketed from. We knew it's a key support, exact same support you're watching on Amazon, not the place to short. And if I would take you down memory lane on Tesla at the start of this year, do you remember this support? Shock or not? That's support in a play right now. And this would be key resistance on S&P next. As we knew, not the place to short. On Tesla, this is key reversal zone, where Tesla collapsed from $130 per share. Shock or not? Tesla rallying, Amazon collapsing, Netflix collapsing. How is that possible? All for one reason only. Price action and Fibonacci said so. Nothing else matters. Everything else will never give you the accuracy price action and Fibonacci will. What looks the best out of all instruments? Apple, sitting very, very pretty. Boom. Key resistance on S&P is reached. I warned you, just like I warned you yesterday morning, not the place to short. Will the price collapse from this level? Because I told you so, it will. Lower the price collapses, more powerful market will become. Again, after this level, price will head drastically higher, with green level being your key target. But if price collapses right now all the way down to here, it's a gift for knowledgeable trader. As expected, price is putting up the fight. Market is flawless Fibonacci puzzle. That's what you see in front of you every day. And if you understand rule number 1 you learned in the course, day 1 in Foundations or Mastery course, you knew extremely well. Second morning in a row, shorts were not an option, as we're sitting at institutional support. So what you're seeing in front of you is the end of the minor trend. Let me remind you, this is exact same levels that played out on Apple. Do you remember Apple at 181? My goodness, how long did Apple struggle at this level? For almost a year. Look at that. War zone on Apple. Time and time again. After this level, Apple moved up drastically higher. And that's what you're seeing in front of you right now on S&P. Is it all the same thing? Of course it is. I recognize that in '08. Shock or not, this was expected. Lower the price collapses, more interesting market will become. Do you want to trade Apple? Do you want to trade Euro? Do you want to trade Tesla, Amazon? Choice is yours. Price action remains the same. The only difference? Risk management, trade duration time. The big difference in day trading, your execution must be top-notch. If you understand and know everything, but you cannot execute, you cannot be day trader. Use everything you learn in the course for your long-term positions. Simple. 1 minute chart in a whole lot of pain, just like Apple was at 181. Apple skyrocketed through 181. Just taking a year. Where did the buyers come from? Key Fibonacci support, cannot short. Key Fibonacci resistance became key support. All present in front of you, years in advance. Shock or not. As expected. Apple sitting very pretty in massive correction at reversal zone. Out of all the instruments, Apple looks the best. 2500 on S&P is 216 on Apple. Knowledgeable trader right now adjusting his trail very close. Boom. We knew short are not an option. This remains firmly counter trend move. This remains firmly this morning key target. Adjusting your trail very close, well outside of break even is a key. Buyers are weak traders. The fact that we're sitting at institutional support with very weak buyers, not to be ignored. Did we know or did we know that this would be a big problem area? As again, we're dealing with very weak buyers. As again, we're sitting at institutional support, second morning in a row, not the place to short. But buyers are worthless. As we're discussing every single morning, we're dealing with institutional support levels, but we're not seeing institutional rallies, we're seeing bullish weakness. When you are dealing with bullish weakness, you must respect this level. You can't ignore. Trail very closely. Volatility will become bigger. Markets will become more dangerous. If for the next few days, for the next few weeks, we are dancing in bullish correction, it's because we are sitting at institutional support. But if we are not seeing 500-600 points rally, it's showing you institutions on sidelines, not excited about buying this market. Use common sense. 1 minute chart isn't much as pain as Apple was at 181. As Amazon right now at key support. As Tesla rallying from. All the same. as this number was on S&P at 2200, with of course 2300 and 2500 to follow. But S&P put up the fight at 2200 for over 6 months, until after the election. Fibonacci support respected, just like on Apple. Bullish rally continued. Flawless reminder. It did not matter who won the election. It did not matter what the earnings were on Netflix. The only thing that matters, price action and Fibonacci. Trail very carefully. We're not out of the woods yet by any means. Buyers stepped in as expected. Once again, we stayed out through junk and fluff. We stayed out through weakness. We only interested in meaning. Shorts were not an option. This is a key second target now, traders. Now. $2,700 will be war zone. But as you learn in the course, this is ultimate, most important moment on your trade. And when it correlates with such important numbers as institutional numbers, you cannot ignore your key target. So again, being a follower in day trading, never an option. Only if you know how to place a trade, only if you understand what's happening in the market, you will succeed. If you're dancing on a table because you scored a lucky point, because you are chasing a market, it's never a recipe for success. Only knowledge is. Knowing what to do with your positions in this market will determine your success. Will make a difference between spectacular opportunities or completely opposite. Volatility will only pick up the steam. Markets will become only more powerful, with spectacular collapses and spectacular rallies to follow. S&P 1-minute chart had done exact same thing as Apple had done, as S&P had done on weekly. Do you remember S&P at 2300 with 2500 to follow? Do you remember Apple at 181 and 192 to follow? It's playing out in front of you on 1-minute chart. Adjust your trail even closer. Not the place to buy, the place to take your profits off the table and leave 20-30% of your position on. If you're trading only single or double lot, this is where you get out of the trade. Again, only if you know how to place your trade, only if you understand what I do, you can be successful. Trading room open only 12 hours per week max. 2 trades were out. In the course you learn how to be quality trader. In your course you learn not to be trigger happy cowboy, not to block your vision with indicators. No speculative stops, no speculative targets. This is rule-based method. Time and time again as you're witnessing, trail was not touched. You're witnessing price struggling at decision point 2, as you learn in the course, the place to exit, not to enter your trade. Agree? So please pay attention to S&P 1-minute chart and please take a look what's happening right now on oil. Institutional chart on oil doing exact same thing as S&P 1-minute chart. Oil being in complete panic outside of decision point 2. Key target right now, key support, not the place to short. It's all the same. If I remove the name from the chart, you would not have a clue what this is. Knowledge is power. And that's what you're seeing in front of you. 10 years of work with price action and Fibonacci. Nothing else matters. So again and again and again, this is ultimate reminder. This is not the place to buy, this is the place to exit. Since the time I brought up the trade to the trading room, price skyrocketed 15 points. Price reminding you. If you trade with ultimate rule-based method, the sky's are the limit. Do you want to trade oil? Do you want to trade Apple? Do you want to trade Amazon? Choice is yours. Rules are met, take a trade. Rules are not met, do not touch the market. And remember, very basic rule. Speculation and indicators and trading on the news with fundamentals never ever recipe for success. If it was, Netflix would be now at 1,000. If it was, Amazon right now would double and triple in value. Netflix this week collapsing and Amazon selling off. It's all the same. Price comes outside of decision point 2, not the place to buy, the place to exit. And that's exactly the reason why Netflix sold off. No surprise whatsoever. None. Shock or not, spectacular earnings don't mean a thing. Fibonacci means everything. If trading on the news and using indicators worked, every single person on the planet would be Bill Gates. What works? Price action and Fibonacci. What works? Price comes to reversal zone, exit the position. Price comes to decision point 2, exit the position, adjust your trail, close. Ouch. How many points did S&P already collapse? Many. 5-6 points. Not the place to buy, the place to exit. How many points did price collapse since the exit? My goodness, take a look at that. Do you want to buy in that area? 13 points collapse. Shock or not, it was expected. When price comes to such powerful historical institutional resistance and your key target on your trade, green line, not the place to buy, the place to exit. No matter what you trade. And that's exactly what happened on Netflix. Shock or not, spectacular earnings did not mean a thing. Fibonacci meant everything. Charts are twins. And that's what you're seeing in the trading room. And that's what you're learning in the course. What you will decide to trade, absolutely up to you. Pure and simple. Would like to join us in the courses? Please review the information online and there is no wrong date to sign up. If you are joining us in Fibonacci Foundations course because of the historical events in the market, this is a course I'm offering for a limited time only. So you receive foundations on the course, foundations of price action, so you can understand what's playing out in the market. It's never a requirement to come to all session. What it is a requirement to make an effort. View videos at your convenience. If you would like to dive right in, jump into Fibonacci Mastery course, where you learn a whole lot more. Where you learn everything. Multiple strategies, multiple time frames, multiple instruments, complexities of the markets. If beginner traders taking the course, so can anyone. Every single trader trading different instrument. If you want to jump all the way into private mentoring, all courses included. Again, you can review videos at your convenience. It's never a requirement to attend all classes. What it is a requirement to make an effort. Please review the testimonials on the website. Always my favorite part. Always reminder why I live and breathe what I do. Every single trader, different instrument. Every single trader sharing what they trade and what their results are. What you choose to trade, absolutely up to you. Any questions, do not hesitate to contact me. 925-257-4298 or info@fibinstitute.com. Trading room had been open on average 10 hours per week. Out of 25 trades, 21 trades reached Fibonacci targets. As you saw on the trade this morning, decision point 2 is a key target where price is now, again, where price sold off from. Less than 20% of the time price make it to reversal zone. Decision point 2 is your core target. If you trade against a trend, decision point 1 is crucial, not to be ignored. Every single trade, different stop, different target. Look forward to seeing you in the course.